Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Every bull market creates experts. Every bear market creates philosophers. International relations are basically group projects with nuclear weapons. Geopolitics is where maps become market-moving events. The market has two speeds, wrong and I should have bought yesterday. My portfolio and my diet have something in common, both looked better last Monday.
Campaign promises have met geopolitical reality. Since the Iran war began, European natural gas has surged 94%, sulfur is up a staggering 146%, while Brent and WTI crude have climbed 35%. Even everyday essentials haven't escaped, with rice up 37%, wheat 20% and palm oil 16%. During the 2024 campaign, President Trump pledged to slash energy prices, curb inflation and make groceries cheaper. But global commodity markets don't vote, they react to wars, supply disruptions and shipping bottlenecks. It's a reminder that while governments can influence prices, they don't always control them. Google just reported a record $112 billion in quarterly net income, but here's the detail investors shouldn't miss. A whopping $98 billion or 87% came from other income, largely reflecting gains on equity investments like SpaceX and Anthropic. Strip that out and core net income was about $33 billion, just 2% higher than the previous quarter. That's still a healthy profit, but it paints a very different picture. Accounting gains can boost earnings for a quarter, but investors will be watching whether Google's core businesses and its massive AI investments can deliver sustainable growth over the long run. Solar panels and wind turbines grab the headlines, but battery storage is what keeps the lights on when the sun sets and the wind stops. And here's the striking part. The world's top 10 battery storage suppliers are all Chinese. CATL alone commands around 20% of the global market, with companies like BYD, Eve and Lithium close behind. China isn't just leading the electric vehicle race anymore, it's building a commanding position in the infrastructure that underpins global energy transition. Here's a sign of how quickly wealth is being created and inherited. Forbes now counts a record 35 billionaires under the age of 30, with fortunes spanning AI, healthcare, industrial machinery, and gaming. The standout story is AI. 22-year-olds Surya Mitha, Brendan Foodie, and Adarsh Hiramat each have an estimated $2.2 billion after building AI startup Mercor, making them the youngest self-made billionaires ever, overtaking Mark Zuckerberg's record. But there's another pattern too. Many of the youngest billionaires inherited family fortunes. When people say markets are diversified, this chart tells a different story. The world's top 10 asset managers oversee nearly $50 trillion, with BlackRock alone managing $11.55 trillion and Vanguard another $10.1 trillion. Together, these firms influence the capital allocation of thousands of companies across virtually every major market. In fact, the top 20 managers now control 47% of the world's professionally managed assets. While they don't own this money, most of it belongs to pension funds, governments and individual investors. They decide where a significant portion of global capital is invested. India's executive pay just reached a new milestone. Persistent Systems CEO Sandeep Kalra topped the FY26 compensation charts with an eye-popping 388.6 crore package, up 162% from last year. That's more than 3 times the pay of the next highest CEO, highlighting how stock-linked incentives can dramatically reshape executive compensation. The broader trend is equally telling. Technology and manufacturing companies dominate the highest paid CEO list, reflecting where shareholder value has been created.